Co-presented by CoinDCX, your gateway to crypto. Co-powered by Green Lamb Laminates, Gustakhi Saaf.
Very warm welcome. You're watching Business Today. I'm Nabila Jabal. Going to take you through the top business news. First, the headlines. Government falls far short of the disinvestment target, manages to meet just 18% of the revised figure. Markets hope for big-ticket sell-offs in the coming 3 months. It's a multi-pronged attack on your home budget after fuel prices were raised 9 times in 10 days. Natural gas prices to be doubled from tomorrow. LPG, CNG, PNG set to get costlier. Indices close in the red on F&O expiry. Sensex snaps 3-day winning run. Nifty ends below 17,500 mark. Telecom gains while pharma stocks fall. And Sri Lanka's economic crisis worsens as people run out of food and medicine. Government announces 13-hour daily power cuts across the country. And it's a merry march for the box office in India. 3 films crossed the 100 crore rupee mark. Good times set to continue with more big releases in the pipeline in April. Now, one of the biggest disappointments for the government this year has been disinvestment. Just 18% of the target has been met with this year. This despite the initial target being slashed by as much as 55% in just 2 months. In fact, markets as well as the industry are looking at the process gathering pace in the next 3 months at least. Let's have a look.
It was supposed to be the great Indian IPO, the blockbuster sale of shares in insurance giant LIC, a sale which would have balanced the government spending with much needed funds. The war in Ukraine, however, blew the plans away. The stock markets turned incredibly volatile and the government had to postpone the IPO. There were fears that the issue could not be priced right under the circumstances. Sensex touched its recent high of 61309 on the 17th of January before beginning a continuous slide. It was at 57232 the day Russia invaded Ukraine. In just 7 sessions, the benchmark index fell to 52843. Sensex has now recovered to around 58600.
The fiscal deficit is in 22-23 is estimated at 6.4% of the GDP.
The union budget had already slashed the disinvestment target for financial year 2021 and 22 to 78,000 crore rupees from a very ambitious 1.75 lakh crore rupees. Of this, just 13,531 crore rupees have been realized as divestment proceeds, around 18% of the revised target. Nearly 4,000 crore rupees have come from sale of government stake in Axis Bank. 3,650 crore rupees are from sale of NMDC shares and 2,700 crore rupees are from the high-profile Air India disinvestment.
The overall sharp rebound and
the finance minister had originally planned some big-ticket disinvestments this year. This included sale of small pie in LIC, complete sale of Bharat Petroleum and privatization of some PSU banks. Shipping Corporation of India, Concor and BEML were the other big names in the list. All these have been pushed to the new year to fulfill the relatively easy target of 65,000 crore rupees which has been set by the government. With Karishma Sudani, Bureau Report, Business Today Television.
Now, if you think the worst in price rise is over, think again. The constantly rising prices of fuel will have an impact in the coming days. What's more, you better be prepared for gas to get costlier.
Prices are rising, groceries are costlier, food budgets have gone haywire, and the problems are set to accelerate. Petrol and diesel prices have risen 9th time in 10 days, with petrol nearing 102 a litre and diesel at 93 rupees a litre. But there's another energy shock in store for you. The government is all set to more than double the price of natural gas for the first half of this fiscal year. From the 1st of April, the price of locally produced gas will be doubled to a record high of $6.1 per metric million British thermal unit from the current $2.90. This is in line with the increase seen in international gas prices. The impact will be in your kitchen, in your taxi rides, at CNG pumps, with all gas products absorbing the price hike. LPG, CNG, PNG are all expected to get costlier. The move will also raise prices of gas sold to the power sector, industries and fertilizer companies, adding fuel to the fire of overall inflation. This comes even as the invasion of Ukraine has resulted in a sharp increase in global commodity prices, be it crude oil, edible oil or fertilizers. The ongoing war has affected the supplies of sunflower oil, palm oil and soybean oil, leading to a rise in their prices. Indian firms are already adapting to this situation, passing on commodity price increase to retail prices. Hindustan Unilever has increased the prices of its soaps and detergents by 3 to 5%. Britannia also plans to hike prices as much as 7%. To top it all, the resurgence of COVID in China and Hong Kong has led to shutdowns that threaten to further constrain supplies of raw materials. The ball is in the Reserve Bank of India's court. The next 10 days will decide whether the central bank will increase interest rates to rein in the galloping inflation. The consumer price index is already above 6%, the upper cap of what the RBI is comfortable with. Even the wholesale price index is sounding a loud alarm. Between April 2021 and February 2022, WPI inflation averaged 12.7%, the highest in more than a decade. A tough call for RBI, which has to balance inflation with slowdown concerns. Bureau Report, Business Today TV.
Now, the index of industrial production, IIP, rose by 5.8% in February, the highest in the last 4 months. The number is a big jump of the 3.7% growth in January. The index comprises of 8 crore industries, including electricity, coal, crude oil production. It also includes steel, cement and fertilizer production and constitutes a large part of the GDP. The centre's fiscal deficit jumped to 82.7% of financial year 2022 target in April 2021 to February 2022. The huge increase in the fiscal deficit in February was because of transfers to states. In February, the centre transferred about 2.42 lakh crore rupees to states as against 95,082 crores in January. The fiscal gap now stood at 13.1 lakh crore rupees. Let's now talk about our market indices. Close in the red on F&O expiry day. Sensex snaps 3-day winning run while Nifty ends below 17,500 mark. Now, today was the last trading day of financial year 2022 and Indian stock markets have outperformed most global peers, including the United States and United Kingdom this year. Sakshi Batra, Associate Editor, Business Today TV, joins us in this analysis on how did our markets really perform in a year which was otherwise marred by the second wave, rising crude oil prices and geopolitical concerns? Sakshi, financial year 2021 was indeed the best year for Nifty in a decade. What about 2022?
Well, that's right. Curtains come down on a year which was full of ups and downs, and investors got a taste of both bull run as well as bear phases. However, it has been the second consecutive financial year when the stock markets have posted double-digit returns. Benchmark indices actually hit their record high levels on October 19, 2021, and thereafter, markets began declining. And here's how the stock markets really performed in FY22 for you. To start off with, FY22 was the second best year for Nifty in the last 5 years. So the recovery from the COVID crash in 2020 continues, and in 2 years, stock markets have delivered nearly 100% 2% returns to investors at the end of the year. The report card really indicates that the Nifty and the Sensex gaining about 18 to 19% in FY22. When you talk about the stock market cap of BSE listed firms, that jumped by nearly 60 lakh crore rupees in FY22 to over 264 lakh crore rupees. Now, over 560 stocks, and that is from across sectors, soared more than 100% on the BSE, which included some penny stocks as well. Now, the key outperformer among the major indices was definitely the small cap index, which gained over 36% in FY22. Banks lagged behind with gains of just about 11%. In fact, all of the sectors of the Sensex ended the year on a positive note. When you talk about the topmost gainer, it was the power index that surged the most with 62% returns, followed by metals, telecom, IT and realty being the top performers. However, in terms of the underperformers, sectors like FMCG and the auto sector failed to find favor with investors and underperformed the benchmarks by a big margin, both up by just 2 and 8% respectively. Now, in terms of the Nifty stocks particularly, Hindalco turned out to be the top most Nifty performer with 84% gains, and that was followed by Bajaj Finserv, Titan, Tata Steel and ONGC. Even the metal stocks clearly were shining through. And among the laggards, when you talk about, you had the likes of HDFC Life, Hero MotoCorp, Shree Cement, HUL and BPCL, which lost anywhere between 15 to 22% in FY22. Now, two conglomerates also need mention as they really performed exceptionally in this year. It was the Tata Group and the Adani Group stocks. In the Tata Group, you had the likes of Tata Elxsi and Tata Power that more than doubled and even quadrupled investors' money, and most of the group stocks really outperforming the benchmarks quite sharply. Now, among the Adani Group stocks, you had the likes of Adani Transmission, Adani Total Gas and Adani Power that rose over 100%. So definitely among the big wealth creators this year. And let's not also forget the primary market space, which was hot and fiery and clearly the buzzword for most part of the year. And why not? We actually saw a record over 1 lakh crore rupees being raised by 52 companies. Now, with more and more new age tech companies also making debut in this year. The IPO frenzy now may also continue in FY23 as well, as Prime Database now expects another 1.4 lakh crore rupees fundraise. And all in all, in FY22, it was a good year for investors.
All right, thank you very much, Sakshi. In fact, it could also be bad news now for equity market investors in India. A report by Goldman Sachs has claimed that foreign investors will reduce their exposure to the Indian stock markets this year. The multinational investment bank claims that net foreign portfolio investment into India is likely to be just around $5 billion in 2022, 30% lower than 2021. In contrast, foreign investors had flowed in $40 billion over the past 3 years, taking the Indian stock market to new heights despite COVID and an economic slowdown. Of this, nearly $14 billion have been taken out in January to March quarter ended today. In fact, let's cut across here to Geetu Moza, consulting editor, Business Today TV, who explains to us what this really means for the equity markets.
Goldman Sachs has cut 2022 FPI flow projections for India by over 80% to $5 billion from $30 billion estimated earlier, out of over $40 billion inflow that we have seen in the last 3 years of 2019 to 2021. Nearly $14 billion has left in the first quarter of 2022, and the impact of which we have clearly seen in the markets, with Nifty touching the level of 16,000 despite the good inflows from the DIIs. FPI equity assets stood at 45.5 trillion rupees as of the end of Feb 2022, which translates into 18% holding of aggregate listed Indian equities. So they still hold a good grip over the Indian equities. Amongst emerging markets, if we see, India has remained a bright spot for foreign investors. And if we study the correlation between the FPI and the equity markets, it has largely been a positive one, especially for a long time span, which is not the case with DIIs, as the mutual fund flow still are not seen as reliable driver of capital markets as the FPIs have been. So high crude prices, high interest rates, high inflation, and the current geopolitical turmoil that we are going through is expected to create a significant balance of payment deficit in 2022 for India.
Thank you very much for that information. All right, cutting across to our corporate wrap, all that news making headlines. SpiceJet has settled its $20 million payment dispute with Credit Suisse. In a statement, the airline has said both parties have reached an in-principle commercial settlement of the dispute and were in process of finalizing documents. Supreme Court of India has also urged SpiceJet and Kalanidhi Maran, former promoter of the airline, to consider settling their protracted share transfer dispute over talks. Now, Hindustan Unilever has increased the prices of its soaps and detergents by 3 to 5% amid rising inflationary pressure as raw material costs surges. Now, telecom operator Vodafone Idea Board's capital raising committee has approved allotment of over 338 crore shares to its promoters to raise about 4,500 crore rupees. Public sector gas major GAIL said it will buy back about 5.7 crore shares for about 1,083,000 crores. The company looks to use its healthy surpluses to reward shareholders for the second time in 2 years. Global investment firm Bain Capital has agreed to acquire 24.9% stake in wealth and asset management firm IIFL Wealth Management from General Atlantic Singapore Fund PTE and FIH Mauritius Investment Limited, a wholly owned subsidiary of Fairfax Holdings Corporation. It's time for a short break on Business Today. We'll be right back. Stay with us.
आज मेरा यहाँ नामांकन भरना सभी महिलाओं का आज सम्मान हुआ है। अपने प्रधानमंत्री जी का, अपने राष्ट्रीय अध्यक्ष जी का और अपने मुख्यमंत्री जी का कि जिस तरह की परिपाटी चली आ रही है 2017 से, जहां महिलाओं का सम्मान होता है, आज उसी में ये एक मजबूत कड़ी दोबारा से जुड़ी है।
You are watching in
Welcome back. In another blow to the Aam Aadmi, who have missed filing their tax returns by March 31st, will have to now shell out higher in TDS. Those individuals who have not filed their income tax returns for the financial year 2020 and 2021 will have to pay a higher TCS from April 1st. In fact, if an individual's total TDS and TCS deducted is about 50,000 rupees or more, they will end up, in fact, they have ended up missing the ITR deadline. If that's the reason, then they will be eligible for higher TDS from start of financial year 2022 to 23. The higher rates will continue to apply to individuals until their name is removed from the defaulter list. And according to the Central Board of Direct Taxes, in June 2021, individuals' name will be removed from the defaulter list once they file their ITR. Hollywood today lost one of its biggest action heroes. One of the sure bets at the box office, Bruce Willis, announced his retirement from filmmaking after he was diagnosed with aphasia, a disease which makes it quite hard for usage of words. It affects speech, writing abilities, also to understand language. Bruce Willis found recognition with his 1988 super hit Die Hard and appeared in 4 sequels over the next 25 years, earning more than $1.4 billion at the box office. His biggest hit, however, was the M. Night Shyamalan directed Sixth Sense. Other memorable hits include multicast Expendables, Space Adventure, Armageddon, and action-packed G.I. Joe Retaliation. Now, it's been a merry March for theatre owners in India, with 3 films crossing the 100 crore rupee mark at the box office. And it's not just the cinemas which are celebrating. OTT platforms also are quite on a roll.
It's a triple delight for cinemas. RRR, The Kashmir Files and Gangubai Kathiawadi have given theatre owners a reason to smile, sweeping away the pandemic concerns and anxieties. March has seen 3 films enter the 100 crore rupee club, with Alia Bhatt starrer Gangubai Kathiawadi earning 126 crore rupees in a month, and The Kashmir Files collecting 231 crore rupees in just 18 days. S. Rajamouli directed RRR, which released on 25th of March, has already crossed the mark within 6 days. What's helping the theatre is the removal of the 50% cap on their occupancy. Now, with the third wave of COVID all but gone, movie buffs have returned with a vengeance. This is a big relief for OTT platforms as well, who have been paying for content through their noses.
After the third wave, the way movies are coming out and the way collections are going up, I don't see a reason why, theatrical would continue and OTT as a market separately would also continue. Rather, I would put it this way, that OTT would also want a lot of movies to, come on theatrical, because there is a price discovery that happens at the theatrical end. So from that perspective, OTT would also want movies to come on theaters first and then they can come into the platform.
The return of spectators is not only fueling ticket sales, but also funding the bread and butter business of theatres. The concession stands which dish out overpriced sodas and snacks to ticket holders. These revenue constitute a major portion of a theatre's earnings.
The main reason for that is because the multiplexes, if you see their numbers in detail, almost 80 to 90% of their profits actually are coming from the food and beverage business. So in a way, a simplistic way of looking at the multiplexes is that they are a glorified QSR company where the footfalls allow them to sell food and beverages at arguably pretty high prices, and their margins are coming from there.
The party is expected to continue with the upcoming Vijay starrer Beast and Yash starrer KGF 2, also expected to see an overwhelming theatrical response. The 2 films are releasing a day apart on April 13th and April 14th, a long weekend at the start of summer season. Following the path laid down by Pushpa, both films will be available in all 4 South Indian languages as well as Hindi. With S. Vidya, Bureau Report, Business Today Television.
Who's the biggest celebrity brand in India today? Well, do advertisers really prefer Virat Kohli over MS Dhoni? Does Amitabh Bachchan still command a high brand value? What about non-cricketing sports stars? Here's a quick report with all the answers.
Virat Kohli may have left some of his fans disappointed with his captaincy row, but he's still the darling of the advertising community. A new survey of most valuable celebrities by consultant Duff & Phelps puts Kohli at the top of brand value hustings. His latest brand value, a cool $186 million, while down from 2020, is still enough to power as many as 30 brands. In the second spot, actor Ranveer Singh, who has been valued at $158 million, a big jump since 2020. His better half, Deepika Padukone, is 7th on the list, making them the ideal power couple for advertisers. Actor Akshay Kumar is 3rd on the list, his brand value having risen 17% in a year. Finding a strong fourth spot amidst her male colleagues is Alia Bhatt, fresh from the success of Gangubai Kathiawadi. Not only is she the most valuable female celebrity brand and also the youngest among the top 10. Fourth down is Mahendra Singh Dhoni, who has successfully rebranded himself in a non-cricket avatar. He jumped 6 slots to find a spot in the top 5. Completing the top 10 list are Bollywood celebrities ranging from the veteran Big B to the young gun Ayushmann Khurrana, all of them valued in the neighborhood of $50 million. An Olympic gold medal has also added to the brand allure of Neeraj Chopra. Shuttler PV Sandhu and athletes like Bajrang Punia, Devendra Jhajharia have also added major endorsement deals to their brand portfolios. Bureau Report, Business Today TV.
Well, and tomorrow we bring to you the chairperson and co-founder of Upgrad, Ronnie Screwwala, in an exclusive conversation with Udhyan Mukherjee. Stay tuned for that.
So which of the two categories that you just outlined do you think the current crop of digital billionaires belong to?
If I had a gathering on a round table of the 30 or 40 nomenclature word of digital billionaires, I will say let's talk in 3 years, because the ground will shift, the ground will change substantially. Just because you raised money at a certain valuation does not necessarily mean that's sustainable.